for the US dollar, and from a technical perspective, the US dollar is breaking down, it's supposed to 10% or more decline. And especially yesterday, the Apple issues sparks the currency, the flash crash. So what's your view on in the short run, the dollar's trend?
Well, the dollar's been fairly strong over the second half of the year. Given our view on the outlook and rate hikes, we think the dollar is still likely to be pretty healthy. So if the data collapse and it looks like the economy has experienced these so-called Wile E. Coyote moment where we look down and there's nothing there, and that world says the dollar should weaken. Absent that, we think you still have some more front-end rate hikes to go. And although US growth is converging to the rest of the world from above, we don't think that's necessarily a bad outlook for the dollar.
And for the crude oil market, do you think the oil's upside has been limited by some concerns? If there's concerns, what kind of concerns do you think about?
Sure, there's certainly some combination of the expectation of weaker demand for oil and maybe supply cuts that have yet to cut into inventory levels. That's continued to put downward pressure on oil. We do think that they will ultimately resolve in favor of oil moving higher, but at the moment it's giving a very synchronized disinflationary pressure, whether it's in headline inflation or input prices. We also saw it in the ISM or the PMI data where prices paid is lower. So we do think oil will finish the second half of maybe around the middle to the second half of the year, more closer to the $75 per barrel range. But at present, the pledged cuts in supply haven't altered the inventory.
What's your expectation about the relationships between China and the US, especially from the statistics coming out from China's side?
Well, I think from the economic side, I mean, the authorities in China continue to try and provide support on the margin. We just got some more word from that overnight on targeted easing to alleviate some of the pressures. We think that they're trying to balance the fact that credit conditions have gotten tighter. That's slowing demand perhaps a little more than they thought, and they're trying to offset that on one side. The more that they can do to alleviate those growth concerns, the better it'll be for the US outlook and vice versa. On the policy front, I just think maybe this is too naive of a statement, but I think they just have to learn how to talk to each other and understand what the goals are.
Both sides.
Well, and I'm not sure it's clear to both sides what the goals of policy are. From the US's side, for example, is the goal just to reduce the trade deficit? Or is it the goal to address longer-term concerns around intellectual property, the transfer of technology, and so forth? If it's just about the trade deficit, there are short-term solutions to that. There are arrangements where you could get pledges from the Chinese to buy more US exports in exchange for some relief on tariffs. The problem is when they talk, it's hard to separate the trade deficit issues from the longer-term security issues, and the more that those things get together, then the harder it is to reach a deal. So I think it's important for each side to know what the goals are, and then I'd say to separate and isolate the conversation. Build a win somewhere, and see if you can't build off of that. Because at present, it feels like they're just talking two ships passing.
Yeah, it's the different tracks for the two leaders. In the January 7 and 8 meeting, so what's your expectations?
Personally, I have...
Two powerful meeting.
I mean, I have fairly low expectations. I don't look for anything in either direction. I'm just looking for, say, incremental news that would keep the process going, but I'm not looking for a major announcement.
What's your wishes for this year's market?
I think the debate is essentially, are we slowing to a recession or are we slowing to trend? So my wish is that we slow to trend, which means the expansion keeps going, but it doesn't generate any obvious imbalances that lead to a sharper slowdown. There are still economic issues globally that need to be addressed, and there's a lot of progress that needs to be made in Europe with issues related to Brexit and trade relations between the US and its major trading partners. And what we don't want is some of those political issues in a way to prevent further progress. Because the US is doing fine. We're about 6 months away from our longest expansion
Okay.
on record. The rest of the world isn't there.
Okay.
So I think my wish would be that the expansion keeps going and some of the worries in markets don't come to fruition.